So what do you make of these moves to the downside as we go into this Fed meeting? Generally, mortgage rates, they seem
rates
to be
are
tied
about to come
the
down, they're
10-year.
saying.
The Fed has a bigger influence on the 2-year. Do you see this move as sustainable, this downside move in rates?
I think it's not dramatic, as we know, and I think what we're seeing has already been baked in. I don't think we're going to see rates go much
100%.
lower than this. And I think
Not currently,
the sentiment so far in the housing market has been decent. We've seen a pretty good pickup.
6.25.
And
That's
buyers
good.
have a bigger advantage now because rates have come down
compared to
and
what
we've
it's
seen
been the
more
past 2
inventory
years,
come on
right?
the
That's good.
market. And so that's good. We still need sellers to bring their prices down a little bit.
Yeah.
But we need more housing, and we do have an affordability issue in the United States.
Yes.
And so we need to build more housing. I think that's the biggest challenge for us.
Yeah,
right
you do.
now.
Which is really interesting because it depends on the area. Like I say, I'm in Florida, and where I'm at, the building has been incessant since I moved to Florida. It's compared to what I'm used to, which I moved from California. I've lived in Massachusetts and New Jersey. Right, New Jersey is like they're not. Where are they building? Right, they're tearing down the Pine Barrens to build. Where else are you building? Right, and basically all blue states, and now I'm in Florida, which is a red state, and I see it just so drastically different. They knock everything down. They build, and I'm like, who's moving into these places? And then they open, and there's more cars there than I expected. Actually, I'm not saying that they're fully full, but there's definitely people that are moving in. As long as the population continues to rise, which I've said on videos here before, it is, no matter what they say, yeah, okay, people come and go, but net migration is up and continues to be up in Florida. As long as that continues to be the case, they're going to need places to live. That's what it is. But everywhere else in the country, this is the story. We need more inventory, more inventory, more inventory, more inventory.
Bess, you're hitting on, I think, is an issue for anybody that's ever bought a house or sold a house. The idea here that a lot of people want the owners to lower their prices. But if we're going into a rate cutting cycle that would potentially lower rates, then generally prices go up. So if you're going to a rate cutting cycle, if you're an owner, why would you lower your price at this point?
Yeah, you'd wait.
Because prices have been too high for too long. And just because sellers think the prices should remain high is not a reason to keep them high. And things haven't been moving. So that is an indication that sellers need to reduce.
That's right. That's right. If your house is sitting and you need it to move, you need to lower the price. And if people are selling their houses at lower prices, and then that's a comp for your house, that's going to lower your price. Things like that. Yes, those are all indications of lower prices, which currently, where I'm at, prices have been dropping for 2 years. But in other areas, it's just starting to happen. Some places hold better than others. Like even where I'm at, there are certain areas, like in Naples, it holds better. Venice holds better, right? Venice has not been immune. Right now, how I see it, to me right now is a time to buy. That's what I see. I'm like, buy. As prices are dropping, prices are better than they have been in the past few years. Buy. But like if you can afford it and you're looking, to buy a house, now's a great, and I'm not a realtor. I like real estate. But to me, that's how I see it. Now's the time to buy if you're interested. I have nothing to sell you. But in my opinion, now's the time to buy.
Prices. And now that buyers have, more affordability with rates coming down, you want to meet in the middle. When you have a healthy intersection of supply and demand, then the market moves. And we've had this sort of, stalemate where buyers and sellers have been separated and there hasn't been a healthy movement. And so we need to get everybody into the market. And so sellers have to participate in that to keep the market moving.
Okay. With that thought in mind, the idea of a rate cut, it may create, just more income for people, the idea that they potentially could be paying less for goods and things like that. Would that also help the housing market, this one rate cut, or do we need to see a series of rate cuts before consumers just have more money to spend on housing?
For sure.
Probably
series.
we're going to need to see more rate cuts
Yeah.
if Chairman Powell decides to do that, because I don't think we're going to see much more than this. This
Right
lower
now.
30-year has been baked in,
Yeah.
and so I don't think we're going to see it come down much more.
Yeah.
But we may get 2 more cuts this year, is my understanding,
Which would
and
be
potentially
huge. It
3
would
more
be a big
next
deal.
year, and that may potentially influence mortgage rates to come down, maybe into the high fives, which I think then you would see much more movement in the market overall.
All right,
Yeah,
have
if
some
we go
housing
under
reports coming up
6,
later today.
if we go under 6, people are going to be coming out of the woodwork to buy houses. Because historically, and you see that the people that are buying houses now, right? If you've seen those reports, the people that mostly have been buying houses right now are older people, which is crazy to me because they also own the most. They own the most, right? But they have history on their side. They know they've seen it. They've been through it. They've been like, these are still good rates. I mean, even me, right? My first house that I bought in California, the rate, my interest rate for that house was 7.375. There are reasons why, and I bought it in 2017. There are reasons why it was that high, but the underlying point of it was I bought a house that I can afford. Not only that, I can over afford the house. When we sold it 3 years later, I had 10 years of the house paid off. So affordability was not the thing. And the interest rate did not bother me because I could pay double on the house. And I did. So interest rate is relative. And as we can see, it changes. So now is the time to buy if you can afford it, because as we see it right now, interest rates are going to be dropping. So if you get into a house now at a lower price doesn't change in the future, right? In terms of what you bought a house for is what you buy it for. That's it. That's not going to change. But your interest rate can change. So if you buy a house now and you get it for 10% off, 15%, I got this house for 16% off. And that, I think, wasn't even the amount that it came off from the peak of what they were trying to sell it for. Because I came, right, this house was sitting and all that kind of thing. So I think from the peak, it was even higher. But if in 2 years or in 1 year from now, the rates are significantly lower, I can refinance. And then my payment's going to drop even more. I mean, that's going to be more money in my pockets. This is all, it's better. Meanwhile, even when I bought the house, I'm like, I think we just bought equity, right? This is now the second house that I've owned that I'm like, we just bought equity. We bought so low that there's equity in the house already. That may be less so for this house because the prices have come down still since I bought it, but not really that bad. I think I got it for a good price, basically. And in the future, it definitely will be worth more. And that's really all that matters. So,
what are your expectations? Are we going to see any movement when it comes to home builders and things like that? Starts with the idea that we're going into a rate cutting cycle. Does that motivate the actual builders themselves to start building in anticipation of there being more liquidity in the market?
I don't think so.
Really?
I mean, I think people are waiting. I think this is an environment where people are taking their time. They're not sure. The narrative is unclear.
right.
I think it's really important that the Fed maintains its independence, and there's no sort of politicization of what the Fed is doing. And so I think people are waiting to see what's going to happen. There's a lot of talk about a potential recession because we're seeing the slower labor market. Inflation is still higher. And I think that's what the Fed is trying to control to keep economic stability for the future, which is what we care about.
All right. I think you hit on my last question for you.
Some of that is interesting because while, just talking about keep the Fed independent and all that kind of thing. And while there are a lot of examples of currently of the Fed being politicized, right? Trump coming out and just railing against Powell, who he put in, which is always funny to me. I'm like, oh boy. At the same time, I think it is interesting. It's like, okay, but how come they haven't been cutting in terms of jobs, forget what they're doing with the numbers and all that kind of thing. Now, even during Biden's administration, they were revising the jobs numbers months later. Every quarter was revised crazy down, like crazy. No different than the first quarter of Trump's administration. So it's like they've been doing this. The job market, anybody that's out there knows that the job market has not been as strong as they've been saying it is the whole time. I'm talking not just Trump, also Biden, right? It just hasn't, right? So I'm not trying to be political about it. I'm trying to say they all are doing the same thing. They all are doing the same thing. So why hasn't he been cutting in that way? I understand that there's more to it in terms of like, well, inflation and all this money got pumped into the system the past couple of years and that inflated everything. And now we have tariffs and what's that going to do? And I think that tariffs has been largely a big boogeyman. It's still playing out, but there's been such a scare tactic on what he's doing with tariffs that I don't know that all of the scare stuff that's come through has really played out in the way that they've been saying it. That's all I'm saying. I'm not saying all the way. I'm just saying in general, it's like they're saying there's going to be such just this massive amount of inflation. And I'm like, I'm not noticing any more inflation than there already was. It's like groceries still cost a lot of money. Gas still costs basically the same. I can only speak for locally, right? For what I pay. It had been coming down. I think that, they lowered the interest rates right before the election. Let's not talk about that being political, right? Of course that was, right? This is where I'm like, okay, this is BS. Like, yeah, okay, be independent, but all of it's political, right? All of it's political. So like, yeah, okay, yes, maintain your independence, but yes, it's all political. Come on now. Let's not joke ourselves. It's ridiculous. So everything is mostly the same prices. Housing has been dropping, right? Housing has been dropping. And to me, that has more to do with just supply demand. That has more to do with supply demands than any other specific thing. So politicizing all of it just gives to all these news people, and it just creates stories and news cycles and all that business.
Some of the president's efforts to have an influence on the Fed, whether just openly saying they should cut, now putting his own nominee on the Federal Reserve. Do you think that could impact rates long term, and also just other things that impact the housing markets like inflation, long-term bond rates? Does that have a potential impact on the housing market?
I think down the line it could. I mean, I think we have to be careful. President Nixon, had, tried to pressure the Fed back in the 70s to cut rates because, he wanted to have a stronger market. But in the long term, there was incredible volatility and instability. And we don't want to repeat something like that for a short-term goal to create all this chaos in the market. And I think it was Ken Griffin last week who wrote a great op-ed in the Wall Street Journal about how crucial it is to keep Fed independence. And we want to maintain that, right? Super important for the market in the future and stability, which is what we care about greatly.
Okay, I don't think that Fed independence is going away. I think that, again, this is just another scare thing. I think this is just another talking point for news cycle people. I don't think it's a problem that he comes out and says what he wants about anybody because free speech, and he can. Like, why should he not be able to? That's wrong, in my opinion. So I don't think it's a big deal. I don't think that it's going to take away from Fed independence. I think that just in the future, we're going to turn around and be like, yeah, the Fed's still independent. That was all just BS. It was all just this. That's what I think. But yeah, he's trying to tell them what to do. But the funny thing to me, again, is just he's the one who put the guy in. Like, it was his guy. So it's like, it's just so, politics and all this, it's just so silly. All of this side of it. I don't care about any of that. And unfortunately, I can't speak about what happened to us in the 70s because I'm not a historian. Yes, I know the inflation and gas lines. I know that kind of stuff, but I don't know the specific. I wasn't around the specifics of what happened in the 70s in terms of what Nixon was doing and talking it right. I don't know the specifics. So I wish I knew history better, but that's not my strong point. That's not super my strong point, right? I'm sure that other people can comment and say what was happening, and then I'm sure you'll get their political, edge with it also, because, everybody comes with it, especially these days. So I think that bringing it back, sure, I guess we need more housing. Sure, I guess we need more housing. The interest rate cut that's potentially about to happen, like any day now, right? Any minute, potentially by the time this video comes out, I think it's already baked in. I think that I've went through numbers before. Lowering the interest rate, while it does help affordability, you need many cuts. It needs to be more than just a quarter point for there to be really that much of a difference in what your monthly payment is on a house, right? It's got to be at least half a point to 1 full point. It's got to be, right? This is where it's like, okay, in time, all these quarter points will add up and we'll be in the 5s. That's going to make a big difference compared to almost 7. That's going to be a big difference. But all these just like little like inching down, it's like, okay, this is $40 cheaper a month. Okay, now you're $50 cheap. Now you're $75 cheaper. I'm not saying that's no money. I'm just saying when your mortgage is $2,500 and now it's $2,400, that's not that big a deal. Anybody can go Uber Eats for $100 a month, right? Right? Go find $100 a month. If you do a minimal amount of work, you can go and find $100 a month. So the difference is, okay, can we get mortgages from $2,500 a month, what would have been $2,500 a month, to now $1,900 a month or $1,800 a month? That's going to move the needle. And when that happens, home prices are going to go up.